So why does that happen? That is happening because we have limit orders and we have market orders. Limit orders are orders which are put in the system and people have just selected the level they want to enter and they put their order there and they sit back. Market orders are orders which are being executed in live market because something is changed in the market. So everyone wants to get into the market as early as possible. So they are trying to get into the market at whatever price they can get into. So those are the market orders. Obviously, when you have lot of market orders happening, the auction would move faster and the volumes also would be on the higher side. So why does that happen? That is happening because we have limit orders and we have market orders. Limit orders are orders which are put in the system and people have just selected the level they want to enter and they put their order there and they sit back. Market orders are orders which are being executed in live market because something is changed in the market. So everyone wants to get into the market as early as possible. So they are trying to get into the market at whatever price they can get into. So those are the market orders. Obviously, when you have lot of market orders happening, the auction would move faster and the volumes also would be on the higher side.
The market order helps move price faster. Now, why do I say that? Okay, because the market order adds momentum to the existing demand and supply already there. It helps move price further up away. And generally speaking, okay, when we talk in terms of market orders, we get to know, okay, that these traders who put markets are generally, and I'm saying generally speaking over here, are generally the kind of people who know what they are doing. They are not, okay, people randomly trading, and they are armed with a certain set of information which tells them that, okay, I want to get into this market now and I want to get into this market quickly. And because of that, okay, we say that price moves faster when there is a market order. Now, in an order flow chart, you really do not need to get into the details of why it is a limit order or why it is a market order. Good evening, everyone. This is Shai with you. Welcome all, okay, to this little program, okay, we curated for you on order flow trading. And in this session today, we are going to be taking a deep dive into the world of order flow. And we'll keep it simple, okay, and we'll make it easy to understand for people who are new to the field of order flow. But if you are the kind of individual who's traded with order flow for a period of time, we are here, okay, to talk to you about a few nuances, okay, which you should be knowing about the world of order flow, about interpreting the information from order flow, and how, okay, you can use it, okay, to monetize, okay, this information, okay, which comes to us better, right? So in this session, okay, we are going to be talking a little bit more, and we are going to be focused, okay, on this word, okay, called order flow, and these strategies, okay, which are based on the emergence of order flow data. Now, first and foremost, a lot of questions, okay, come in, okay, when this word, okay, order flow comes in, and it's got a lot to do with the kind of information which is out over there when it comes to the world of order flow. So when we speak about order flow, what we essentially, okay, look at is the traded volumes. We are not looking at the orders in the book which have still got to be traded in the exchange. Now that's the important distinction I want to make right at the top of this session. When we look at this word order flow, we're looking at traded volumes. We're looking at money already in the market. Now, we need to make a distinction over here about orders which have still got to be vetted by the exchange, which have still got to be confirmed by the exchange, or the orders from the order book, and the orders, okay, which are already traded, which is what we call the trade book. Now, the reason, okay, we focus on the trade book and the traded quantities and the traded volumes is because that tells you a lot more about what the the chart can do, about what the market, okay, can do in the near future. And if that trader who took that position based on whatever, okay, he decided, okay, to do, and whatever, okay, he was wanting, okay, to do, if he took that position based on a certain strategy, that strategy, that plan comes visible to us in the order flow chart. And if for some reason, okay, that plan, okay, goes off, that trader finds himself off, or what we call upside down in the markets, then it works a little bit differently. And the strategy, okay, which he uses then to come out of the market or to adjust, okay, that losing position is what can be a market mover also. So that's top of the book today. Okay, we're going to be talking about traded quantities. We are going to be talking about actual real money at work in the markets. Now, what kind of money? We are not going to be focused, okay, on every little trade which comes over there in the order flow chart. So a lot of people, okay, when they are new to order flow, what they do is they focus on every bit of volume, every one lot, two lots, three lots, okay, which comes in. That is actually, okay, not the real purpose of watching an order flow chart. The purpose is to look at where the big boys are, where the big money is, and what they are doing. Because every time somebody, okay, with about 2,000 lots or 4,000 lots or 5,000 lots comes in and enters a position, he's a prepared trader, he's a professional trader. Nobody is going to put 2,000 lots in the market without a plan, without a strategy. So we are on the lookout, okay, for these kind of traders who come in and who trade big size. We call them LLTs, or large lot traders. The other word, okay, which we use for them is called whales, big whales of the market, right? So what is order flow? Order flow is about demand and supply. And why, okay, we need to look at order flow is to find, okay, amongst all those numbers which are there in the chart, look at where the big guy is, where the big data is, where those big houses are coming in. Because if you have 1,000 people, 1,000 retail traders trading one lot each, the impact of that is going to be 1,000 lots. Okay, and that 1,000 lots, okay, may not be a market mover. But against those 1,000 lots, if somebody comes in big and strong and he puts in about 3,000 lots, and he overcomes whatever was a net total of all that 1000 lots, be it on the buy side or the sell side. Now that becomes a market mover, and that is the reason price suddenly starts going up and down and wherever it is. So we want to be tuned in, and we want to know what that big lot guy is doing, or whether he's a buyer, whether he's a seller. Now when it comes to buying and selling, just because he's put in a order, it may not be a new demand coming into the market. It could be a reversal of an existing sell side order, right? So we have a strategy in place to identify that. And we also know when that money which is coming in is new money, and we call them initiative traders when there is new money coming into this market. And when you get initiative buyers and initiative sellers, that is where the faster moves of the market are. Right now, we simplified the world of order flow trading for you, and we introduced a few concepts. But this is not a one-page book. I mean, you cannot come in and look at an order flow chart and just see it at the top level, at the top layer, and say that this is order flow. There's a little bit of complexity involved. We break down the order flow into something called responsive buying patterns, initiative buying patterns. We look at the total amount of demand and supply which is there, and we have a term for it called the COT, the commitment of trade. And we also break it down into the liquidity of the markets. So we look at where the zeros are, where the large lot traders are, who is providing what kind of liquidity to the market. So in sum, we have about 6 different ways we look at the entire information from the order flow. Now, one particular thing in that, like COT, is not a full identification of what an order flow chart is. So you'll have to bring about 5 or 6 of those elements together, and not all 6 of them click at the same time. Sometimes 2 or 3 coming together are good enough to give you a profitable trade. But the whole purpose over here is to talk about the strategies which we are going to be doing, which are going to be using. Remember, this is not a one trick pony. You cannot go and work with an order flow chart and just look at a certain way of trading with an order flow chart and say this is it. There is about 6 or 7 different elements involved in understanding the order flow chart, and we're going to be speaking on all of them. And the better you get at understanding all of them, the more proper you are as a trader, and the more confident you will become as a trader. And you get more confidence when you see that strategy work live for you, become profitable for you in a live market, right? And for that to become profitable for you, you have to have the confidence in knowing what it can do. And that confidence is gonna only come when you study it, when you attend programs like this, and you get a fair idea about what the order flow is, right? So I invite you to delve into this world of order flow with us. It's a very beautiful field. It can create a lot of dividend for you in the months and the weeks up ahead, provided you put a little bit of effort into it. Today's session, we are going to be opening up the world of order flow for you with some live charts and live examples. And I'm going to invite my colleague Uttam to join me, and he's going to be discussing some clear examples about what order flow can do. So I hope these examples help you to probe deeper into what the order flow can do and the way it can assist you in your trading. Right. So I'll hand the floor over to Uttam. He's going to be walking us through some order flow examples from the not too very recent past, and hopefully, with these examples, you'll get to understand what an order flow chart can do for you. So over to you, Uttam. I'll let you take the flow forward, and let's have some examples about how best we can implement
Yeah.
order flow.
Thank you, Shai. Thank you. Uh, Good evening, everyone. A quick sound check. I hope the I'm coming across fine. A quick sound check. Good evening, everyone. Great. We have the Nifty futures order flow chart on screen. This is the 30-minute order flow. So before I go into the details of what has happened today, as Shai mentioned, why do we use order flow? For us, order flow is the most transparent indicator which shows us volumes which are coming in live, and we can see how it is being interpreted as demand and supply. So for at VTrender, we are using market profile to understand the structure of the market. And market profile also gives us some important references along with some good trading setups. But it is the order flow which gives us that confidence and the trigger point. So when we are looking at order flow, it gives us that signal that whether we need to go in long, whether we need to go short, or whether we just need to wait on for the uh, for more information to play out and more confirmation to come in. So that is why we use order flow, and what we do is use it in a combination of 30 minutes and 3 minutes. So market profile charts are based on 30 minutes. So we have the 30-minute order flow chart to have the bias right and also to know what is happening on the larger time frame. And then we have the 3-minute order flow where we do the actual execution of our trades. So the signals which come on both are equally important, and we look for initiative signals to get into a imbalance. So we are looking for initiative buy or initiative sell. And as Shai also mentioned, it is order flow is not just one part. We have almost 6 things which combine and show us what the order flow is. So as you can see, we have the sellers on the left and the buyers on the right, and then we have every order flow bar has the POC, the point of control, which is the highest volumes of that particular bar, and the VWAP. This is there for the 30-minute order flow chart. And then in the bottom pane, we have the volumes for that particular bar, and then we have the POC, and we have the volumes which has come in the POC. And then we have what we call the commitment of trade, which is COT, which is one very important aspect of the order flow chart, and which we want it to be in sync with the direction of what trade we want to take. So, and then at the bottom we have the open interest and the change of open interest. So these are all important numbers which are there on the order flow chart, and how we have to analyze them and look for setups and trades to monetize the data, the latest data, is what I'll try to explain. This is today's chart. So taking a little bit back to previous day's order flow chart, we can see how we were probing lower yesterday. We were weak. The Nifty was weak. We had a budget day which had fallen, which had made a new low for the series, and then it gave us a bounce. And yesterday when we opened, we did not get any demand. We can see how the order flow is showing more of reds than greens, and then we have these signals called RB, RS, IB, and IS. So responsive selling, responsive buying, initiative selling, and initiative buying. So as I mentioned, we want to look for initiative players to be in the market, and we want to get in the market as with them. So that is what we look for on both 30 minutes and 3 minutes. So in case the bias on the 30 minutes is on the short side, we will look for fresh IS signals on the 3-minute order flow chart to enter into a new position, and as per that entry we will look to part book our trades and trail the rest to the cost, making the trade a safe one. So here yesterday what we had was we made a probe lower in the IB, and then we got a RB in the BP rate. So RB is responsive buying. In order flow, when you are getting an RB signal, it is telling you that it is old business. So we did not find any fresh selling which was happening when the market made new lows in the BP rate. So which is why it had to again get back above VWAP, and then we again got an RS in the D. So RS and RB are responsive players. So it is only going to give you a small range and a mean revert to the VWAP or the POC of the day. So then we would want to look for some initiative sellers to come in for more downside. So which is what happened yesterday after the pullback we got in the D. We broke the VWAP effectively in the E period, and after which we got lots of reds in the G. You can see even the COT has changed to minus 6,000, and we are staying below VWAP. So VWAP is one very important marker on the order flow chart, and whenever we are uh, we have got a clue that a buyer or a seller has entered and he will push the market in his direction, it the first most important thing that buyer or seller will do is keep the auction below or above the VWAP. In this case it was a seller who was coming into the market, so he would have kept the market below VWAP. So as long as the auction is below VWAP, we can look for more downside and lower lows. And then we in the G period yesterday we got this big red bar which started with the 6,600 seller right at this 24360, which was also the series POC of July. So when we got this, we were very clear that the auction is headed lower, and we went on to close near the lows of the bar. But what happened in this bar was it had a lot of sell side inventory, and not all of them were profitable. So you can see how you can say the auction had gotten too short. Although this seller who had come in the first was still profitable, all the sellers who had come in later in the lower half, they were not able to do much, and because they could not break below these lows, and when the auction started to coil in the same range for the next three TPOs, it was very clear that the sellers are feeling a bit of the pressure and they are not able to push the market lower. So you can see the cot was deep red in all these three bars. And what happened was, because the sellers were not able to do a good job, the auction would have made a test, would have made a probe to check for new buying or to check the strength of these sellers. So what happened in the K period yesterday was we had a big short covering swipe above VWAP. And what this swipe did was it forced most of these laggard shots to exit. And how we can say that? Because we can clearly see the cot has turned green over here. 7882 green is the biggest number of the day in green in terms of green cot, and we are above VWAP. So, but then this does not change the trend or the main trend. The main trend is still down, and the reference we have from the morning open is this POC, RSPOC of 24466. So we were not able to take out this RSPOC. That means that the this was more a short covering move, and after the short covering move was over, we did not get any fresh demand above VWAP. So generally what happens, the short covering move takes out the sellers, but then and gets in new buyers for the trend to continue on the upside, which did not happen in this case. And what we can see in the very next bar was the sellers again began to start adding. We can see 12,000 red caught, which was telling us that the sellers are again adding. Overall, the caught yesterday at close, we follow the 10 bar caught. We have this live panel where we have this 10 bar caught which we follow, and we want the 10 bar caught to be in the favor with the trade which we want to take. So yesterday this 10 bar caught was deep red. We were, I think, minus 51,000 red into the close. So that definitely told us that there is more selling inventory which is there in the auction than the buying. So even though we closed above VWAP yesterday, we were not bullish because there were lot of short inventory which was added. And it came as no surprise today when we gapped lower. And but what happened today in the gap down was, in the A period, although the cot was red, we saw some selling which was coming in. What we did was we formed an RB bar, responsive buying bar, in the A period. So when you're getting a responsive buying bar, it is telling you the order flow is not showing us sellers uh, active aggressive sellers. So this was definitely not a case to go short. And the very next bar in the B period, what we did was we got back above VWAP, and then we got some good greens. You can see you have more greens. The green numbers which you see on the order flow chart are colored because it is showing us a imbalance. It is showing us a buyer imbalance as compared to the alternate sell side number. So you can see in this bar you have more greens than reds, and we have got back above VWAP, and then the cot is showing us 9556. So after which the seaside again, it stayed above VWAP, and then it got some good greens. We have a what we call the trifecta of greens. We have a zone of three good big greens together: 2897, 1011, 932 in the C period, and it is taking support right at the VWAP of the day. Plus the cot is also showing us green. So what this is telling, this changed our bias for the day, that we did not get any fresh supply, and the order flow is showing us that the buyers are entering this market. So it could be the sellers who are covering from yesterday, and or it could be some good fresh demand also which was coming in. In either case, the signal was very clear that we are not going to go short in this market. And then seaside, we take it with a pinch of salt, and we are a little bit wary about going long in a seaside extension. So we waited for D to confirm that the seaside is going to hold. But the D was not able to make new highs, but then it was again holding VWAP. And then in the E period, the 1115 bar, you can see the dip which we made on the downside has got very less sell side numbers in the order flow. So you can see you have 24, 34, 0 on the sell side. So this is telling us that there is no selling which is coming in when you are getting dips. The dip to VWAP showed absolutely no increase in the sell side numbers. So it was very clear that we are headed higher. And this was a good enough cue that you need to look for either going long calls or going short in puts. And the spectrum chart today was showing us there was huge put open interest which was building up. I'll come to a put example where we'll see the market profile, the line chart, and the order flow chart of a put, and then we will do the same for the call also of today's market, so that we can understand how we can relate what we are seeing in the futures with the options and how we can trade them. So coming back to this Nifty futures order flow chart, you can see, and it continues to remain green. We're getting greens flock together. You can see this G period where we have 4 rows of greens together. You can see the cot is also green. So this acts as evidence that the buyers are continuing to come in, and which is why we were making higher highs on all the TPOs till the K period. And what we did was we went on to tag this POC from yesterday, which was a 224423. It was right at the dot that we hit that POC, so that market profile objective was done. And there we saw some red card started to come in. So this was definitely telling us profit booking is coming in. If we are long, we need to book part and trail to cost. So eventually we closed the day around that same level, and we could not get that intended highs in the L and M period, because this POC was not getting any fresh demand, and whatever demand we were seeing which was building up was booking profit at this level. So this is how we read the order flow chart. The same thing we do it on a 3-minute, and what we generally do is we have this 2-window mode. So we have the 2-window mode on, we have the 30-minute on one side, and we have the 3-minute on one side. So you can see when we are getting these good greens, we will look for IB signals on the 3-minute charts, order flow charts, to go long. For example, this was a good IB bar which came at 154 in the afternoon, where we could have taken a fresh long position with the POC of the bar before the IB, which is at 24369 as our stop loss. So similarly, we look for, once we know what the bias is, we look for these kind of IB signals to re-enter the main trend. So you can see how on the 3 minute we have only been seeing IB bars. So this 11:15 bar, the dip just right at VWAP is a very important responsive buying power. So responsive buying when it is coming in on a day where it is the trend is clearly to the upside, gives you more confidence that you can hold on to your long positions if you are carrying from the open. So this is how we mix the 3 minute and 30 minutes and accordingly look for trades. And you can see this green line in the order flow chart is the VWAP. And whenever we are coming to the VWAP, you can see how the sell side numbers are zeros or lower than compared to the buy side. And if you're getting responsive buying at VWAP, all the more good that it is telling you that the buyers are holding that level. So here again at 9:45, we got this dip at VWAP and we got an RB bar. You can see you've got a big 639 red over here, but still the order flow signal is giving us a RB signal. So, and this is also around the lows of this IB bar. So this is how we check what is happening on the higher time frame and execute our trades on the lower time frame, shorter time frame. So this is the combination we look for, and then as per these signals we look to trade the respective option charts, whether it is the call or the put. So a quick look I'll have at the Bank Nifty order flow chart before we move on to the options chart and see what was the trade we could have taken today. So you can see Bank Nifty was also weak. Yesterday we saw some short covering in Bank Nifty also after this IS bar of the G period, the 12:15 was taken out. And what we this POC of yesterday 51184 and this IB POC of 51100 was the reference for today. And today in the gap down, what we did was we remained below this POC. So order flow charts not only shows us the fresh signals, but it also leaves the footprints of the latest seller or the buyer. So this NPOC line, if we take the mouse over of this, we can see NPOC. It is naked POC or unvisited POC. So when these acts at uh, probable support or resistance levels. So when this is holding, if it was holding on the downside, we would have taken this as a support. And today's open, when we opened right below this, it was telling us that this is now a resistance supply point. And from here, we went on to probe lower, but this was on red caught. We had red caught and we had more sellers in Bank Nifty also, which is why we went on to make these new lows. And once when we made these new lows in the B period, what we see a big 2000 red here. But what it has done is it has shifted the POC to the lows. So shifting of the POC to the lows on the 30 minutes is this also gives a RB bar, responsive buying bar. And on the days profile also, the POC shifting lower tells us that the seller will have to put in more effort to push it more down. So what we did, this was a typical seaside extension we had in Bank Nifty, and you can see how as soon as we had the seaside extension, we had this big buyer, 1031 buyer, and then this was an RB bar. So what happens when we get these kind of a seaside is it gives us a retracement to VWAP, and that is what it did. Immediately we went on to tag VWAP and we went on to make this high of 5964. So once we did this, what the Bank Nifty was stalled between that highs of D and this POC from the seaside all day, and it made a normal day today. So in order flow, there was no other further Q in Bank Nifty because this IB bar held the low and the POC of this IB bar held into the close. So this will still be a valid support point for tomorrow. Whereas on the upside, we will need to take out this RS bar along with this 5100 POC which is there. So this is how we look at order flow on the 30 minutes and even take forward references for the next session. So now we have seen the Nifty order flow chart. and we saw how from the morning we did not get much of sell side inventory or a sell side signal. So we will, so how do we uh, convert that into trades, and how do we monetize this information from order flow? So we have already spoken about this order flow option table, where we have all the option strike of every series. So this is the nifty today's weekly settlement table. And what I have done is I've picked up a couple of examples of today. The put side example is the 24,300 put, and the call side example is that of 24,200 call. So having we'll just focus on the nifty options because I don't think we'll have much time to do more. So in nifty, we 24,300 was the monthly POC, hence that was an important support. So when we open the market profile chart of that, this is the market profile chart of the 24,300 put option. So market profile chart is something which we can have a look end of the day or just before the market opens, so to see what are the important references in that particular option. So here yesterday what we did was we formed lower value, and the POC, and we have to make sure that we are looking at the volume based value area and not the TPO based. TPO based value area is only for spot charts which don't have, do not have volumes. But for options and futures, we definitely have to go with this VVA, which is the volume based value area, high POC and weighted average. So here when we saw the 24,300 put, we have seen that it is made lower value. So in case this down move has to continue, we had to stay below this POC of 50 and the VWAP of 72. On the upside, our references would have been this particular VWAP of the budget day, which was at 135, and this big responsive selling tail, which is from around 177. So when the market opens, these are our references. So what happened when the market opens? So we have in the option table, in a single click, we can open the market profile chart, we can open the line chart, and then to open the order flow chart, we can uh, click on the tab which is given at the bottom right. So here if I open the line chart of the same option, so what we have done today is we have opened higher, we have opened at 117, and you can see the high made here was 139, which is right at this VWAP. So if I open today's market profile chart, you can see how today's open is stopped right at this VWAP level, right at this VWAP level. So this in market profile, we have this term, why we look at VWAP and POCs, we look at whether we are getting a rejection or a acceptance over there. So in the line chart, we can see how we opened higher, but immediately this VWAP and POC, the green line and the pink one, was broken as early as 922 bar. So when the VWAP and POC is broken of that day, and it is also a earlier reference for us, for this 24 3000 put to be a long, it had to sustain above that VWAP of that budget day, which was this 135. So if we would have gotten IB signal in order flow, I'll come to the order flow chart also of this particular option, and we'll see what was happening in that put since open. So what we know is 135 was one level which we had to watch for, and we had that reference from our market profile chart, and we knew that above this we can look for these upper references of 177, and then this POC which was swiped in that G period move of 235. Whereas on the downside, this value would have been our reference, the VWAP and POC of yesterday, and the lows which we made yesterday were were all-time lows, so that would have been one reference. So what we did today in this chart was, even in the line chart, you can see once we broke the VWAP and the POC, this kept moving lower. and all day it remained below VWAP. Although the POC kept shifting down, you can see steps of POC shifting lower all the day, and you can see here how the OI has been building up. So this is showing us how the open interest, the put writers are adding their positions. The line chart is very clear. You have got only green spikes most of the first half of the day, and these red spike are mostly profit booking, and this big red spikes into the close is also profit booking. So what we can make out from this line chart is it is below VWAP. It has broken this VWAP at one important level, which was 135, after which the OI has been increasing. So this OI drop is more profit booking rather than short covering in this put. So this is how we read the market profile and line chart. And finally, when it comes to the order flow chart, let us see what kind of an open we had. As I said, we opened higher. So we made this higher open. We went on to tag that VWAP. So you can see here, what we are doing is we are only getting, we got an RS at the 918 bar, and this 921 bar, immediately we have broken the VWAP. So this is a good signal that, and this is got rejected right from that budget days VWAP. So with this POC 126 as your reference, you can look to go short in this call as early as 921. And what is the because what is the confirmation we get? Just like when there's a buyer, he has to keep the auction above VWAP. If you are a seller, you will need to keep the auction below VWAP. So you can see how this put remained below VWAP, and this swipe in 945, when it got above VWAP, it got an RS bar. So this is again confirming that the sellers are coming in the bounces. And this bounce also happened because of this big seller who had come in at the lows, because of which the POC has shifted lower. This white bold line is the POC. So whenever there is a shift in the POC, you can expect one bounce to VWAP. And what happens at VWAP and what order flow signal we get at VWAP tells us whether it is uh, a seller who is coming back or whether it is a buyer who is gaining control. So, and you can see the open interest. There's one more interesting part we can see within on the option chart is what the COT is doing and what the open interest is happening along with it. So COT being red and the open interest being green is telling you that the sellers are adding open interest in this particular option, and the open interest is rising on writers volumes. So this is how we can confirm. Also, you can see how you have 32,000 red caught, you have 29,000 increase in open interest, and the which is telling us that the sellers are piling on into this put. And the confirmation here would be that it needs to remain below VWAP and also preferably below the POC of that days, as it is shifting to the downside. So you can see how this kept getting added. The cot throughout has been red. You have green cot here, which is some profit booking maybe by the sellers who had come in at the open, because this POC is coming at 63, whereas the opening bar, we saw the sellers coming from 120 levels. So this POC here is at 126. So it could be the case of some profit booking. So responsive activity is only old business. Initiative activity, if we had to see in this particular option, would have been an IB bar at VWAP. If we would have got an IB bar at VWAP, that would have meant that the sellers who had come in at late in the later stages would have there is a chance of them getting trapped. But you can see how around VWAP we used to get RS bars in this, and there we were getting again confirmation of big red caught with open interest increasing. So this is telling us that sellers are adding on every bounce. Whenever we are going lower, you can see some green caught, which is telling that some profit booking is happening. But at no point of time in this put, we saw the auction going above the VWAP of the day. And when it became very clear that it was trending in one direction, this became more a easy trade to hold. So after this is how we look and manage these options. And what we need to look in the order flow is if you're an option seller, the open interest has to go up and the cot has to be red. That is how we can look for and stay short or look to come out of that position. One more point to make here is order flow and open interest. Order flow is the leading indicator. Order flow is tick by tick. So we immediately get to know the relation between the demand and supply. Whereas the open interest is released by the exchange only once every 3 minutes. So that open interest gets updated only every 3 minutes. So we need to have in mind, which is why it is the order flow is more important than what the open interest is doing, and order flow is leading. So when we are getting a signal in order flow, it is all the more strong conviction to get into a trade, and open interest can give you the confirmation a bit later. So that is one point which you always have to keep in mind. So after this, this put just kept falling, and you can see I think the last bounce which we got near VWAP was around this 11:15, and we just kept dropping here. And you can see how these NPOCs kept building on the upside. Even this 20 level, which the NPOC which was formed at 11:45 was not tagged into the close. So we remain below this 20 level. So when you're getting so many continuous NPOCs in a chart, you know that that instrument is trending. If it is coming on the upside, that means it is going down, and if it is coming on the downside, that means it is trending to the upside. So then this is how it played out, and what we did was we closed this at 0. So you can see how even on the market profile chart we kept making lower lows on all the TPOs. The CP rate did give us a pullback high, but we were not able to get above the IBH or the VWAP of the day. And finally the POC closed. The POC was at 6, but we closed this at 0. So a similar kind of setup we can check out for the 24,200 call option. So just like what we did, we first saw the market profile chart of the option. So this is the 24,200 call option at close of yesterday. So what we did yesterday was we stalled right at the VWAP. Again, I'll have to put in the volume based value area. So what we have done yesterday is we formed an inside bar with both value and range inside the range of that budget day. So, and the lower reference for this 24,200 call was this 101 unvisited POC, and this was from 24th of June, right? So this was our support, whereas on the upside we had this profile which was the reference. What we did today was we opened lower because it was a gap down. We made, in fact, we made new all-time lows in this. The previous low was 86, and we opened lower than that. But what happened in the market profile was immediately it was an open auction out of range start, and we began to form value in this at this POC, the unvisited POC. So how do we trade this? How do we trade this? Because once the IB is completed, we look for a range extension in either side. And once we got this higher highs in the D period, starting from the D period, this call option was a long trade for us. And the targets was this POC from previous day and the VWAP. And finally, this VWAP of the budget day, where the HVN also was formed yesterday, the halfback around the 227 mark. So this is the levels which we can get from the market profile chart and see how they are playing out on the line chart and the order flow chart. So if we see the line chart of the same call option, you can see at the open you had lot of open interest which had come in. So because of the gap down, maybe we had some writers who had come into this, because what we can see is after that began to the open interest began to fall. So and here we can see the opposite action of what we saw in the put. You can see this green spikes is clearly telling us the open interest is rising here, and they'll be mostly writers who wrote blindly because we had a gap down and they were expecting more downside maybe. But in the order flow we saw in Nifty we have got an RB, so it was not telling us to remain short. So shorting calls were certainly not what was recommended after we saw the order flow of Nifty futures. So once we got back above the VWAP, and especially in this bar at 10:30, you can see this was a good green bar from where we never broke VWAP again. So here we can see, and as we have studied before in the line charts, what would be our references would be the higher VPOCs, which was at 166, and this green line is yesterday's VWAP, which we also saw in the market profile chart, which is at 200, and above this POC of 256 would have been our next target on the upside. So how did this call option play out? So if we see the order flow chart of this call from morning, we can see how we made these new lows at the open because of the gap down, and how we are getting this RB bar. So we have got this RB bar, we have got the POC also shift right to the lows. So this is telling us that it is taking support. This option is taking support at this reference. So once, then what happened, and you can see here how at the open there was blind red caught and open interest increase. So this is only telling us the writers were just got into this call short because of the gap down. They were blindly writing in, not realizing what actually was happening in the order flow chart. So once we got this RB here in the 921 bar, it was very clear that the selling was not getting much of follow through, and that is the reason we started to get these swipes, and in the swipes we started to see some of these shorts covering. So as I mentioned here again, we are just moving around VWAP, and we again made this RB around the lows, the POC, and see, just like how I was mentioning, if you're getting a bunch of NPOCs which are getting accumulated, it is telling us that zone is becoming a good support zone. So here you can see this 71, 73, 76. So it is telling us that this zone is now become a good support zone for this call, and this can hold. So once, but for any option, if we want to go long, we want that option to remain above VWAP and take support at VWAP. So that is what we need to look for. So if it is just rotating around VWAP, that is not giving us that much of confidence of staying long in that option for a longer period of time. Here definitely we can go long at around this zone with this as support, but we are not getting that constant sustenance above VWAP. So which happened only after we made this RB at 1024, and this big green bar of 1030, which we also saw in the line chart, was what gave us that good buy signal in this call. And this was coming right at that reference of 116, the POC which we had. So this 101 was the VPOC, and right there we got this good IB bar, and we have zeros at this level. So when you are getting zeros in an order flow chart, it is telling us that there is some good initiative activity which is happening in that direction. We had a small video at the starting of this presentation which was telling us about market orders and limit orders. So this kind of a bar is telling us everyone wants to get into this call. It could be because shorts are covering, it could be because longs are adding, but the zeros in the middle is telling us they want to get into this. So this particular bar became an important reference for the day. So this VWAP and this POC of 90 along with this 85 would have been our reference to be long in this call. And you can see how that support held, although we were getting RS here, but the bias from this particular bar in this call option was to trade the long side. So whenever we are getting sub RB or IB signals, we could look to go long. So here you can see how at 11:18 we got this IS bar, which made that dip below VWAP, and we see right at that reference where we saw that bar coming up, it was holding that lows. 96 was the low, and we've got zeros on the sell side. So this is telling us that this is holding up. This IS is not a very good IS once because it is closed above the POC, and next, immediately next bar, it is negated this is. So this again becomes our reference, and it has happened at VWAP. So that means the buyers are defending the VWAP reference here. So this is how we look and enter and hold on to our trade. So here now, once we have negated this is, the POC of this particular bar will become our reference. So you can see how this POCs again are beginning to accumulate in one zone. So when you are finding so many POCs getting bunched together in continuous bars, this is a sign of aggressive activity happening. So you want to hold on to these kind of long trades. And you can see how we just kept moving higher, and these zones were never tagged for the rest of the day. They would act as potential support, and any dip we get near this zone, and if we get an RB just above any of these bars, is a very low risk setup if you want to re-enter the position if your book profits. So, and as in when we are leaving new NPOCs, we can have those as our latest references. So you can see how we went on to tag that 166, which was the VPOC from previous day. And after that, we had the 200 reference, which was our next objective. So as long as we are holding this 141, we are looking for 200 as our next objective. And that was almost tagged here. We just missed it. And then in the next TPO, we again made a high of 198. So it was showing us how that VWAP is holding. Generally, these references of market profile gives the seller or a buyer to come back there. So they mostly defend it when it is tagged for the first time or the second time. But when it tags multiple times, it is very clear that is ready to be broken. So here again, you see when we have made this dip from that VWAP level of 200, we have got RB bars. So these RB bars, we have got RBs and we have got zeros on the sell side. So these are telling us there is not much downside. And once we get a green bar again, we can look for a long trade with this POC as our reference. So this was a fresh entry. And I think even in the room, we took a similar trade here. And although we had one reference of 170, but the order flow was telling us that the below 170 there was no sell in this option. So this was still just a swipe, and it was still a valid position to hold if you are on the long side. And this went on to make new highs and get above that VWAP and tag the 227. The 222 was the high. Here you can see the change of character. Here now what we were seeing zeros on the sell side is coming on the buy side. So this was telling us now that uh, this must be the upside for this call is, I think, done, because you're getting zeros on the buy side here. So this is definitely a good profit booking signal for you. This is still a RS, so you don't go short here, but you will definitely book profit and trail rest to the last POC, which is this 195. So you can see if you this 195 is breaking, you just come out, and it remained between this below this 217 into the close. So this is how we look at order flow chart, and we look at how the caught and the open interest is showing us. So in case you are an option long player, you would want the that particular option to be above VWAP. You would want IBs in the order flow to confirm that it is in sync with your trade. So that is how we use order flow and trade it extensively. We use it for options both in Bank Nifty as well as Nifty. So today was Nifty expiry, so we pulled out two examples from today's expiry so that we can have the latest examples. So we get these kind of setups every day. It is only up to us how best we can make use of it and monetize it. So that's it from my side for today, guys. In case there are any queries, you please feel free to post them. I'll try to answer them before we sign off for the day. Fine, guys. So thanks for joining in. And Hopefully this session added lot of value to you guys, and you can make use of what we have spoken today and look at trading markets and using these features what we have. Thank you for joining in, guys, and let's catch up for another session in the coming week. Have a great evening.